Welcome everybody to Advanced Webinars by Hector Garcia. In today's episode, we're going to be covering QuickBooks Online for contractors, construction, and project-based businesses. This is part one of a six-part series that we're going to be focusing on this topic on construction, contractors, and project-based business. And this is recorded on January 21st, 2021. If you're watching this live in Zoom, you are registered for my free advanced series, which is now doing about 3 to 5 episodes a year. So we'll have today's episode, and then we're going to skip after tax season. And on April 22nd, we're going to do QuickBooks Online new features, quarter one edition of 2021. Hopefully they'll have some interesting toys to play with. Then immediately the week after, April 29th, we're going to have a sponsored episode by Transaction Pro Importer by Right Networks. They're making a major upgrade of their application. They're going to add just new ways of the application working for QuickBooks Online and QuickBooks Desktop. So we're going to have an entire episode to talk about the application and the new way to access the application to import transactions into QuickBooks Online or Desktop. Then we're going to skip over, probably not going to do anything on the summer. If we do, you get notifications of that. Skip over to October. We'll do a What's New QuickBooks Quarter 3 edition. So we'll do 2 What's New QuickBooks Online webinars. And then probably not do anything in December. If something interesting happens, you'll know. And then on 2022, I'm hoping, crossing my fingers, that I'll start a new series on e-commerce. And the reason why I'm waiting a whole year for this is because Intuit acquired an e-commerce platform. And I'm giving them a year to get their stuff together, for the lack of to say a decent word in this case. So we're gonna focusing this year on QuickBooks Online for contractors and construction, and the next year on e-commerce. However, I do want to let you know that one of the major e-commerce vendors approached me to create a series this year for e-commerce. So we're negotiating to see if they would pay enough for me to produce a series like that. Otherwise, we'll see how that goes. But for now, for the first half of 2021, we'll be focusing on contractors, construction, and project-based businesses. This 6-part series, the first episode, the one that you're watching now, it's free. It's available to everybody. If you want to be part of the 6-part series, you will pay for the premium access to that. And that's going to be recorded throughout the year. So we'll be finishing around August on this part series. We're going to be covering importing timesheets, allocating payroll from timesheets, from payroll, from third-party payroll processor, below time and materials. We'll be covering work in progress and accounting for completed contract method. We're going to be covering progress invoicing, budget versus actual per project. We'll be covering class locations and tags as useful workarounds to manage certain things in QuickBooks Online for contractors and construction. Then we're going to be covering QuickBooks Online advanced workflows in June. We'll be talking about some custom fields, some things that we can do with the advanced editions that will get us closer to, let's call it, a decent accounting system for contractors. And then part 6, we'll leave it open for miscellaneous. We'll see kind of as the webinar progresses. We might bring a major third-party app like Notify or Builder Trend or something like that to fill in the gaps of whatever we just couldn't cover in the series, because QuickBooks Online is basically not a great product for construction and contractors. If you want to be part of the 6-part series, there's a link on the slides. I'll put the link on the chat box as well. And then there's the 2 coupon codes there, depending on when you purchase it. You will get a discount. So I'm going to sell the 6-part series to the public for $500 when it's completed with a recording. So the kind of my methodology here is the people that pay early and then kind of watch them live as we construct them and build this training series pay less. They pay a deeply discounted amount. And then the people that kind of watch it after it's done and completed, they'll pay full price. So if you sign up before January 22nd, there'll be a $200 off coupon. If you do it before February 12th, a $100 off coupon. If it's afterwards, it'll just be $500. So that's up to you if you want to cover that. Hopefully, if you're watching it live, if there's enough value here and you work with construction type companies you're probably going to want to see the value, sign up, and learn from it. If you've been through my other advanced webinars where we go pretty in depth, like our QuickBooks Online one that we did last year, and the QuickBooks Enterprise or desktop inventory manufacturing, you know that like I bring home tons of value in these webinars. So for today and for the 6-part series, it's going to be QuickBooks Online 100%. And the reason for that is because QuickBooks Online is kind of a really crappy product for construction. Actually, really crappy is generous. QuickBooks Online is a horrible product for construction. However, some people have it. Some people refuse to go to QuickBooks Desktop. Some people don't want to add a third-party app. Some people want to have it, and that's it. And there's nothing we can do to change them or convince them. So what we're going to do is we're going to make lemonade out of the lemons that we have. And in this series, that's what I'm going to do. I'm going to show you how to make as much lemonade as possible with the big lemon that QuickBooks Online is by itself for construction. Once you add Buildertrend, Notify, or any of those apps that are designed for construction, QuickBooks Online becomes a great general ledger companion to that tool, but there's just limitations to what QuickBooks Online can do, right? So with that being said, as I mentioned, as of January 2021, QuickBooks Online is not a good product for construction and contractors, period, point blank, no exceptions to the rule. The reasons why is because we're missing the markup field on estimates, so we can't have a record of how much we think the project's gonna cost versus how much we want to charge and what our markup is. We don't have that in QuickBooks Online. We also don't have a estimate versus actual report, which is tied in to that markup field in the estimates. So without that, we really can't know how much progress we have on the job so far. We also don't have a job cost detail report, something that could tell me specifically what each of the items cost me versus how much I charge for them, like a margin per line item of the invoice or the estimate. We don't have that in QuickBooks Online. We don't have a job status report, so I don't have a report that says which jobs are active, which are closed, which are pending to be closed, that sort of thing. We're also missing something that QuickBooks Enterprise has, which is the WIP report, the work in progress report, that allows me to calculate the percentage of completion account. So that's a really a big issue to me, especially for larger construction companies that want to have accrual-based accounting. And then there isn't an expenses not assigned to jobs report, something where I can quickly identify which potential jobs are missing the customer. So real quick, just because we got some people asking about the coupon code, I'm gonna copy and paste. You can wait until after the webinar. You don't have to do it now. You have until tomorrow. So I'm gonna paste the link and the coupon code so I don't get asked the same question over and over, and we don't get interrupted. And there it is. And of course, thank you if you purchase the program. So so these are the reasons why I think that QuickBooks Online is not a good product for contractors. But again, we're gonna try to what it can do. I will cover. Like if QuickBooks can do it, and someone has devised a workaround for it, I will let you know about it. That is my job here. Okay, we're gonna cover sub customers versus projects. We're gonna cover chart of accounts and item list. I actually have my own chart of accounts for my construction clients, and I have my own item list for my construction client. It's actually a bastardized version of the QuickBooks Desktop default chart of accounts and item list. I just added some modifications to it that tends to work for my construction clients, the few that I have anyway. We're going to talk about using bundles to do lump sum projects. We're going to talk about project or job costing workflows. This is the basic portion of the webinar. Then we're going to talk about zero net check for workflow using items. That's kind of an advanced topic, but we'll cover that. We'll talk about making adjustments for non-cash project expenses. So that's going to be like a journal entry, and we'll cover that. Then we'll talk about working with vendors and 1099 contractors, and we'll talk about preparing a 1099 form for independent contractors. That very last one, if we don't have time to go over it, I already pre-recorded that portion, and the video is on the slide. So if we don't get a chance to cover it, I'll discuss it briefly. There's a lot of moving parts to a 1099, believe it or not. So there's a pre-recorded video for that, all right? So let's start with customers versus projects. So in the QuickBooks desktop world, we have the concept of a customer and a job. Once QuickBooks Online was created, and a lot of people started moving from QuickBooks Desktop platform to QuickBooks Online started calling their jobs, started calling it sub customer. So it was called sub customer. It was never called job, but it was treated like a job. Then around 2018, QuickBooks introduced this concept called projects. And projects is a sub customer that has a different tag on it that QuickBooks recognizes as its own thing, separate from sub customers. Now, where this creates confusion is, why do you need to have both? Well, the reality is there's a lot of people still transitioning from desktop to online. And because of that, we have to start with this duality. I suppose that at some point they'll get rid of sub customers and have only projects. But there are situations where you can have a main customer, you can have maybe a sub department of that sub customer, and then you can have a project under that sub department of that customer, right? So imagine just having, the main customer that pays you, maybe the area, the location, or the project manager that hires you, and then the individual project. So let's do some examples. I'm going to go into QuickBooks, and let's say that I'm a construction company that gets hired by other construction companies. So I'm some sort of trade contractor and I get hired by the main builder, right? So I'm going to go into sales and customers, and I'm going to create a customer who's going to be my, let's say, the main construction company that's going to hire us, right? So we're going to call this one National Builders LLC. So this is the customer, the main contractor that actually builds the buildings that contracts us. So we create them as a customer. Then let's say that National Builders has three, let's call it three managers or three account managers or three individual people that manage projects. And we want to create each of them as a sub-customer so we can track them. So the same thing, I'll go and I'll create let me go back into customers here. I'll go back and create another customer. But this time, let's say this is John Builder, is a funny name there. And then we're going to make him a sub-customer of National Builders. Now, really important, when you create a sub-customer, you're going to have a question here that says bill with parent, bill this customer. This checkbox, believe it or not, is very consequential when it comes to creating statements. If you select bill with parent and you create a statement for the entire customer, every single invoice and payment under this sub-customer will be included in that statement. If I select bill this customer, if I create a statement for the parent customer, this sub-customer will be excluded, and I have to create its own individual statement for this sub-customer. Okay, I know it's a mouthful. I hope that I made myself understood. If I didn't, let me know in the chat. But that's exactly what the concept is. So this has to do with when I do a statement, do I want the history of that sub-customer to be part of the entire company? So for now, I'm going to do bill with parent, which is the most common one, means it's all included in the same statement. And then we're going to hit save. Okay, so that's it. So we have John the Builder. So I'm going to create a new one. Okay, I'm going to create a new one and new customer. And then let's say we have Mary the constructor. Okay, sub customer of National Builders. And again, bill with parent means if I run a statement for my National Builders LLC customer, bill with parent will include this specific sub customer and all the activities in that parent's statement. If I do bill this customer, any statement I create for National Builders will exclude all the invoices and payments under this sub customer. Okay, so I know it's confusing. I don't want to repeat it a million times, but that's what the reality is. So these right here are the sub customers, right? I want to create projects under those sub customers. But I'm also going to show you by mistake, I'm going to create one of the projects in there as a sub customer. I'm going to show you how to convert them. So we're going to call this project X. Okay. And I'm also going to make it to uh, uh, right here, national builders, bill with parent. Okay. So it has to do with statements, not so much invoicing. Okay. So this project wasn't supposed to be here. That project X actually belongs to one of these sub customers. We'll talk about fixing that in a second. So I'm going to go into projects here on the left hand side, and I'm going to create the project. So to create a project, I just click on new project on the right hand side, and then we're going to have project ABC. And let's say project ABC belongs to either national builders or the sub customer, John or Mary. Okay, so that's kind of the concept. So I want to make project ABC a project that belongs to the sub customer, John the builder. I'm gonna go back here for a second. So you should be able to see the path here where you have the customer, we have the customer who's in this case John the builder, the sub customer, and then project ABC. Okay, if I click on project ABC, it goes to the project information. Notice that this project belongs to the customer, John the builder. You don't get to see national builders in here. It is part of it, but you don't get to see it because it's actually assigned to that sub customer. So it is part of the path, but it's assigned to the sub customer. So the sub customer belongs basically its own entity. Okay, so that's the concept between sub customers and projects. Now, if you click on the new project on the little down arrow next to new project, there's a little button that says convert from sub customers. If I click on that, convert from sub customers, it will show me all my sub customers, and potentially I can select the ones that I want to turn into a project. Okay, so I want to turn this project X into a project, and all I have to do is put the checkbox and then click on convert and click on continue, and this will make it a project. Okay, so now it's a project. Let me zoom out for a second. Okay, it's a project. Let me go into projects here and refresh, and now that should show up as a project now. Just make sure it shows here. Let me try one more time. Nope, that's there. So that should show up as a project. Not sure why it's not showing yet. Maybe we'll do a transaction and it'll start showing there. So I'm going to go into sales and go back into customers so we can see all of our customers. Notice that projects don't show up under the customer list. They're not designed to show up under the customer list. Let me go back into projects here and maybe change it to completed. Oh, there it is. It was marked as completed. That's what it was. So I'm going to send it back to mark in progress. That's a really important one. Good thing that happened. Projects need to be showed up as in progress in order for them to show in this list of jobs in progress. If I click all statuses, they will all show. But most of the times when we're managing the jobs, we're going to be managing in progress jobs. Now, it's really cool that QuickBooks allows you to change the status of this job from in progress, canceled, or completed. Those are the three statuses that you have. But you cannot show this on a report. It's just not possible to do a report with this information. It's also not possible for you to show when it was completed or when's the estimated time of completion, when it started, when it ends, contract date. None of that information can be managed here, which is why I mentioned earlier that maybe QuickBooks Desktop is a better product for job status management and those type of issues. Okay, so that should clarify customer jobs versus projects. Now, let's talk about the chart of accounts. This would be the next natural thing to discuss. Now, I have a Google Sheet. You can click on it right on the slides where I have a list. Just if you want to follow along, I basically copy and pasted the list of accounts that I use for my own chart of accounts. So you're going to have a whole bunch of the accounts that I use. This is the chart of accounts that I have set up currently. The chart of accounts that we're going to be working with in this service. I know people want to see what the chart of account looks like in a spreadsheet format. Now, this chart of account is not organized, so it can be imported into QuickBooks. You have to have special formatting to have this import, whether it's QuickBooks Desktop or QuickBooks Online. They need to have a special formatting. So I'm actually going to include the pre-formatted chart of accounts that I sell to my customers. Normally for $50, I sell this chart of accounts to customers. I'm going to include it for the people that sign up for the program. That way you can follow along because we're going to be using this chart of accounts the entire time. You're going to see you're actually gonna like this chart of accounts. And some accountants don't like it, but I particularly think you're gonna like this chart of accounts, and I'll explain why. So I'm gonna go into reports, and then I'm gonna show a profit and loss, and then I'm gonna show you why I think you're gonna like this chart of accounts. I'm gonna click here on all dates and click on run reports, and this is the chart of accounts that I have. So what I do is I have one income category by itself called income. You can call it construction income, whatever you want to call it. And inside of it, I have things like, permits, internal labor, subcontracted labor, materials, equipment rental, travel reimbursement, markup and management fee, because some construction companies just get reimbursed all their expenses and then they charge a 10, 15%, 20% management fee for the project. Now, the other thing I do that I get a lot of flack from accountants is I put bad debt in the income account, because I find that most people get confused when they see a negative, a negative income or a bad debt expense in the P&L. This is not GAAP compliant. If you want to be GAAP compliant, just move that to an expense account. But I prefer to net out my bad debt into that major income account. That way I know what my my gross income net of refunds and bad debts would be. Okay, so that's my style. That's how I like it. And then what's really cool about this is I click on the little triangle and I collapse it, and I have just one simple income account. For cost of goods sold, I split it into two categories. I have direct labor and direct project costs. I split it into two major categories because most people want to see their direct labor separate from direct project costs. Even though it's not split on the income side, it is split on the cost of goods sold side. Again, personal preference in this case. Like I said, it's my own chart of accounts. So we have direct project costs, and here you're going to see things like subcontractor costs, equipment rental, materials, direct travel transportation, permit and compliance costs, and I have like a catch-all, all the direct costs. Now, these are going to mimic every account you see in the income account. So every single income account is going to have a brother or sister equivalent account in my direct project costs, with the exception of internal labor income. Internal labor income is actually split out into another category called direct labor. And inside direct labor, we can track things like direct job labor, workers' comp, direct workers' comp, direct payroll taxes, and direct employee benefits. So I find this to be the preferred way that my construction clients want to see their chart of accounts. And I love that I can collapse it and only get those two lines. Now let's go on to expenses. I've actually grouped my chart of accounts, my expenses, into three major categories. I have selling expenses. Inside selling expenses, I include advertising, bidding expenses, bonding. And my logic with this is that, without these things, you can't sell projects. Okay. You can't sell without a bidding expense, without bonding, you can't sell projects. I think bonding is a little bit different than insurance in general, just because bonding is tied to how much of a project you can gain. So the bigger your bond, the bigger the project you can do. That's why I put it under selling expenses. That's my logic anyway. Then we have car and truck expenses. This one gets tricky. Car and truck expenses for your construction people, that's going to be under direct project costs. And if you want to create your own direct vehicle and direct transportation expenses, you can put this here under direct travel and transportation. Essentially, all the gas that you put on trucks, where you go to jobs, where the construction workers actually get there, that's going to be under direct travel transportation. The car and truck expense that I have under selling expense would be like the office manager, right? The foreman, the main general contractor, the owner. So these are the administrative, the ones that are administrative in essence, but since they also drive around to go bid jobs and inspect jobs and that sort of stuff, I put car and truck under selling expenses. I think it's a lot more variable based on jobs. That's why I put it under selling. Then we have dues and subscriptions, postage and delivery, telephone, and training. My logic here is all the expenses that vary with sales. So indirect, right? So these are indirect variable expenses. I put them under selling expenses. And then all the stuff that's pretty fixed in general. In general, we have bank service charges, license and permits, cleaning, office supplies, insurance, interest. In some cases, I like to move interest out into other expenses. I would actually put it under that other category. But for the most part, I'm going to put it in our general G&A category. Office supplies, professional fees, rent, repairs, that sort of thing. So I like this chart of accounts. Actually, the reason why I like this chart of accounts is because when I do time over time comparison, so I'm comparing over a month or a quarter, I like to have them just like ultra condensed like this, so I can do a much quicker, deeper analysis. So it's just, these 5 categories. Okay, that's it. And again, you don't have to break out your income this way. You can just have one generic construction income account, and that's it. You don't have to break this down. But some people want to break them down based on the item that they use in the estimate itself. We'll talk about that pretty soon when we talk about bundling items for lump sum projects. So you can just ignore all these, just have one general construction income account. This one, internal labor, create one, delete all the sub accounts. Don't even worry about the sub accounts. Just have a generic income account. That's okay. So it depends on how much of analysis you want to make at the account level. Okay. At the same time, if you're not going to break out your income accounts, then why would you break out your costs? So most people tell me, Hector, that's crazy. You do want to break out your costs. Okay, then if you can break down your costs, why can't you break down your income, right? So if I'm charging $10,000 for the labors to someone that I subcontracted and they pay me $8,000, I would love to know what my margin on that subcontract, just on that subcontracted activity is. That's why I break down the multiple income accounts. And the one I haven't covered yet is indirect labor. That sometimes, again, some people don't want to see a third category in expenses. And if you don't want to do that, just send all your indirect labor into your G&A, into your general and admin. Okay. So if you don't want to see it as a separate line, throw it in there. But the reason why I split it out is because I split it out in the COGS side. So some people just want to know what their payroll expense is overall, whether it's direct or indirect. So for that, I have them as their own categories. So they want to add up real quick what the overall payroll expense is, they can do it. So there's method to my madness, trust me. The other thing that I do that's actually kind of weird and crazy, and some people love it and hate it, is I actually combine other income and other expenses into the same category. I make it all other income. And the reason for that is because, again, when I'm doing a collapsed chart of accounts like this, I'm going to do it by month for a second, just so you can see. The most typical thing that we analyze is go back, 12 months. So let's do here last year. Okay. So when you have potentially this much information in here, this much information, I like to collapse it. That way I can have a report that's just super easy to read, and I'm only analyzing 1, 2, 3, 4, 5, 6, 7 categories. Remember, in the other category, I include both other income and other expenses, which it will just break down what's in there now, which is interest income, points and rewards from credit cards, charitable contributions, which in many cases are not even part of the tax return, right? Amortization and depreciation. Again, some people have asked me to get amortization and depreciation out of there and put that into my G&A expenses. We can do that as well. Okay, so kind of breaking it down for you so you understand the logic and the variations that happen. And then the other expense categories, I leave that so that's Ask My Accountant by itself. I never want Ask My Accountant to be buried anywhere, because obviously I would never show a report that has any dollar values in there. Okay, so somebody's asking, where would you put union benefits? Would that be direct labor or cost of goods sold? So the answer is, and I'm gonna put this back into total here. So the answer is union. Let me just hold on a second. Union, it will be generally cost of goods sold, just because generally union are your field workers. So there should be a category under direct labor and cost of goods sold called direct employee benefits. All that stuff would go just in there, direct employee benefits. If you can break down your direct labor and indirect labor costs when it comes to those things, fringe benefits, unions, whatever, then you would have to split it and send some to the COGS category and some to the general expense category. Okay, so employer taxes, the same thing. If you're splitting them, you have to split your taxes. How much of it is tied to field employees, your direct labor employees, and how much of it will be tied to your G&A employees, your office employees, which in my chart of accounts has its own parent category. But like I mentioned, you can send all these into the G&A if you want to. Okay, so that's my chart of accounts in a nutshell. If you click on the link that's there on the presentation, you can see what the Excel version looks like. You can judge it all you want. You can try to rebuild it, reconstruct it if you want. For all the people that joined the 6-part series, I'll be emailing you both my template for desktop, so you can import the same chart of accounts in desktop, and the template for QuickBooks Online, plus the item list template as well. Like I said, I normally sell that, for $50. So if you're gonna pay $300 or whatever for the course, you should get that chart of accounts for free. I think that makes sense. I think most people would want to see that. All right, so that's enough for the chart of accounts. Let's move into the item list, or the products and service list. So I'm going to click on that, products and services, and notice I have my products and service list. This is going to be similar to the desktop one if you're used to the desktop. Very desktop. I just created one more category. I created a category called 00 project, which is the one where I don't want to break out plans and permits and site work and engineering and excavation and concrete and framing and trusses or whatever, right? So if you have a general contractor that does everything that a contractor could do, then you want to take this item list exactly as it is. If you only have like a trade contractor, like a drywall contractor or a plumber or something like that, then you want to just keep the main item category here called 00 project, because the only items you need are labor, materials, subcontracted labor, equipment, and overhead. Those are the only ones you need. What's overhead? Overhead is your markup. Like if you were going to do some markup, notice I misspelled markup here. So if you were going to do some markup, or if you were going to charge a management fee or a construction fee on top of the reimbursed, because there's different ways of billing, right? There's lump sum, and then there's time and materials. So if you're a time and materials biller, typically you're gonna estimate all your time and material costs, and then you're gonna charge an overhead or a construction fee, or your margin or your markup on top of that, 20%, 25%. You just throw that into that overhead income account, right? That's overhead income, not overhead expenses, to be clear. Okay. So that's the only thing you need. You're just gonna need these first 9 that you see here. Everything else is more for like a general contractor. So you would just get rid of those if you don't need them. Okay, you don't need them at all. Okay, all right. So that's it. That's the item list. And just to kind of do a quick preview of what that would look like, I'm gonna go ahead and create an estimate, and I'm gonna estimate project X. It looks like project X is not under one of my sub customers. Let's see what happened. Let me see if I can even fix that. I just noticed that. So can I make project X? It's not gonna let me. Let's see if it'll let me do it here. Okay, so when I created project X, where I made the mistake, and this is a glitch that QuickBooks has, is if you create a project X and you don't put it, or your project, and you don't put it as a sub customer under a regular sub customer you have already, and then you convert it into a project, there's no way to change afterwards that this needs to go to a sub customer. So I'm gonna just get rid of this one. And of course, this is the type of stuff that happens, with QuickBooks, is like all these gotchas, right? Like you weren't not paying attention, you got screwed. So I'm going to delete it. And then I'm going to go back. So I'm just going back for a second just to correct my mistake. So if I had created a new customer called Project X, okay, new customer called Project X, which is a sub customer of National Builders. Okay, and then I decided to convert this one. I wanted to convert this one into a job, what I need to do is before converting it, I want to go edit it, go into edit and put that under the builder that I want. Let's say I want to put it under John, the builder who's my sub customer. Change that first. And then after you do that, you can convert them. You can convert them into a project. I'm not sure if there's a way to do it through here. I don't think there's a way to do it through here. I think the only way to do it is to go back into projects here and go into the drop down, click on convert from sub customer, and then really even more interesting here. So I don't know why this happened. Probably I wasn't paying attention to the way QuickBooks has its quirkiness. So because this is already a sub customer, it's not even letting me access it as a project. So just keep that in mind. And I think this is great that this happened. I don't know if it's always been like this. It's the one thing with QuickBooks Online is that you do something and they change it and you didn't know that they changed it. But what happened just now is QuickBooks is creating a restriction where I create a sub customer and it doesn't let me convert it to a project. But if I have it as a regular sub customer as part of my main customer, it allows me to convert it into a project, but under the parent customer, not under a sub customer. So so it's kind of like one of those things that if you're not paying attention, you might get screwed up. So this is going to be completely useless. So let me just delete this project altogether. And I'm sorry if this is making your head spin. Like, what does this even mean? It's what's going on. What's happening is all these crazy things are happening to me on the fly in a live webinar, and I'm not paying attention to the quirkiness of QuickBooks. So let me do it again. Project X. And I have to create the project from scratch afterwards. So long story short, if you have sub customers that you're going to make into projects and the project's going to be part of the main customer, you can use the conversion tool. If you have sub customers, so 2 layers in that you want to make into project, you cannot create it. You're going to have to run it or create it automatically. So that's something that, again, I'm reminded on the fly while I'm doing the webinar. It's happening. Kind of glad that it happened, but I'm not glad that it happened. I hate being surprised by these things, but it's good that it showed in a live webinar so people from Intuit can look at it and be disgraced out of their lack of creativity on getting these things to work. All right, so on the item list, the summary here is generally for most contractors, the only item list they really need is labor, materials, subcontractor equipment, and overhead. Overhead or markup. Some people call it markup. Okay. Now let's talk about bundles and lump sum projects. And this is where people tell me, Hector, why would you put a line called markup? I don't want my clients to see how much money I'm making on the project. Well, the answer is they don't. And you can also track it, even if they don't. So let me explain. So let's say we have a lump sum project that we're going to build in a time and materials style. That means we're going to figure out or estimate how much the project will cost us, and we're going to add a 25% markup to it. So how would you do that in QuickBooks Online? So we're going to go to New and Estimate. And this is definitely a workaround, by the way. So we're making 100%, we're making lemonade out of the lemons. So we're going to pick Project X here. And then here on the product or service, I'm going to click on the drop-down menu. I'm going to click on Add New, and I'm going to create a bundle. So I'm going to create a bundle. I'm creating a bundle, and I'm going to call this one Project Cost. So just a generic name that the customer will see, and this is what they're going to see. Project Cost. This little checkbox says Display Bundle Components when printing or sending transactions. I don't want to display them. That's the purpose of this exercise. And then in the bundle, I'm going to put my labor item. So I'm going to put my labor. I'm going to put my sub labor. I'm going to put my materials. I'm going to put my equipment. Sometimes we rent equipment, that sort of thing. So we want to account for that. Okay. And then we have equipment. The description is wrong, by the way. That's not labor, that's equipment. Then we have, I think it was 0 point, which is the next one, overhead. Exactly. Okay. So that's what I'm going to have. Labor, sub-labor, materials, equipment, overhead. That's the only items I need for a time and materials project that's billed like a, that's going to be billed like a lump sum. So I'm going to hit save and close. Okay. So I repeat here somewhere. I'm just going to call it project. Okay. Save and close. There we go. So there's my bundle that's in there. So then what I'm going to do, and this is a workaround for sure. This should have said equipment here. So what I'm going to do in this case is I'm going to enter under rate what my estimated costs for these things are, right? If you work with construction, if you work with construction enough, you know that construction people have these spreadsheets and they figure out all their costs, and that's how they price their jobs, right? So they figured out that the internal labor cost is going to be, let's say, for example, it's $5,000, okay? And by the way, all these things are done in QuickBooks Online Plus. You don't need Advanced for doing job costing and this type of work. This is all QuickBooks Online Plus, or Advanced will work, but you need to have at least Plus. Okay, and let's say subcontracted labor, we quoted it for $15,000, and then we have materials, we estimating $37.80, and then under equipment, we're gonna have, let's say, we're gonna use some quantities here. So let's say we're gonna rent let's just call here bulldozer rental. So I'm putting a little bit of details, and let's say that's 7 days for $515 a pop, right? So you can actually work with your quantities, with your rates. So far, I've done cost. This is not how much I'm going to charge for it. This is how much this is going to cost me. Okay, so I'm using this as a workaround to the missing cost and markup component that I don't get with QuickBooks Online. So then what we do is we take this dollar amount, which is $27.35, and we're going to copy that and paste that into our rate. $27.35, copy into our rate. Right now it has doubled the amount, right? That's obviously the problem. The amount has been doubled. And then if I want to do a percentage, let's say we're going to charge a 25% markup on our cost, I leave the rate there, but then on the quantity, I put 0.25. Okay, let's put here 25% from cost. Okay, this is internal labor cost. We have, so I'm just putting subcontracted labor cost. I'm trying to make this as easiest to read as possible. So these are all my costs. Okay. At the end, my project price is going to be $34,231.25. Then I'm going to click on save. Let's put this at the beginning of the month. So let's do 1/1/2021, and then click on save. So that's my estimate for the project. Now, the purpose of this is so when I go ahead and I invoice it, that I report it in whichever specific way matters to me when it comes to reporting. So for now, I'm going to leave this estimate here. I'm now going to create a couple of expenses. So we're going to talk about the project costing workflow. So we're going to enter a couple of expenses here just in the process, so we can start loading expenses into this job, and then we can see what kind of reports we have to kind of know what's going on with this job. Okay, so let's go into save here and close it. And now let's do a couple of expenses. So let's say I'm going to write a check to one of my subcontractors. So we're going to have here Sally, the subcontractor. And we're going to pay Sally, the subcontractor. We're going to pay her on the 5th, check number 101. And we're going to pay her subcontract labor. Now, so notice that I have a category in my cost to goods sold account, which is a 5,000 account, which is subcontracted costs. And let's say I'm going to pay her $12,890. Okay. Here on the markup, I'm not going to put anything there. Just ignore that. We don't need that. That's confusing. Just leave that there. Okay. This is just what we're going to pay the subcontractor. If you wanted to put some sort of markup there, You can do it, but that's only for billable time and materials, which we won't cover until session 2. So for now, we're going to leave that out. And then customer job, that's going to be project X. Okay. So that's actually what I'm paying her for this project, $12,890. Now I'm going to click on save and close, but we are going to go back to that for a second because I actually don't like the way I did it. And that was on purpose. So I'm going to run a P&L. Okay. We're going to run a P&L. Okay. And then so far I got that's reporting into my subcontracted cost as normal. So good so far, not a problem. It's reporting the right place where it's going to be. However, what I want to do is because I want to be able to look at item level reports in the future, and then hopefully crossing my fingers that QuickBooks at some point will have a job cost detail report that will be driven by item. Then I don't want to use my direct category for this. I want to use my item instead. So I'm going to delete that. Okay. And I'm going to use the item instead. So we're going to put 12,080. 12,000. I don't remember. 12,800. I don't even remember what number I put. 12,800. And then under the product, then that's where I'm going to put my sub labor. So I'm going to use the item as a pseudo account. And then that item should be pointing to the right account. My item list and my chart of accounts is all tied together the way it's supposed to. Okay. 12,890, I think it was. Okay, so then I'm going to send this to my project X. Again, all these billable, markup, sales amount, tax, that's only for if I were going to mark this billable, which I'm not. So I'm going to click on save and close. I'm going to go back to my report. It's reporting interesting. There might be a flaw in my item list here. I was finagling with it yesterday. Let me here to my sub labor, click on edit, and that needs to be pointed not to materials. Yeah, exactly. That should be pointed to subcontracted income and subcontracted income. Okay. I'm gonna have to go back and check my mapping when I redid this yesterday when I loaded it in the sample file, but that needs to be mapped correctly there. So that's mapped correctly. So I'll go back into my profit and loss report, and then I should be seeing that in subcontract. Again, sometimes it's good that these little errors happen, just so you can kind of understand what's going on, how setup affects ultimately your chart of accounts and your reports and all that stuff. So there it is. It's pointing to subcontracted costs. Again, there's no job profitability report the way QuickBooks Desktop has it. I'm crossing my fingers that at some point they'll have that. That's why I'm keying the data with items instead. Now, one of the challenges that people have with items is when they use third-party apps to sync into QuickBooks. A lot of third-party apps only bring the expenses into the chart of accounts category, not the item in itself. So if you're gonna need to use items and you're using a third-party app like Expensify or Bill.com or Receipt Bank or whatever those apps that are capturing expenses and they're being loaded into them, you can't use items in many of the cases. Okay. All right. So that took care of that. So now we got the expenses loaded in there. Let's load more expenses. Let's do another check, and let's say we're gonna work with Caterpillar. So Caterpillar. I don't know if that's spelled correctly or not. So we got Caterpillar, and then we're gonna do equipment. So we have our equipment, and this is bulldozer rental, and this was let's say it ended up being 9 days for $498 each. Okay. $498 each. Okay. So that ended up being how much we rented the equipment for, and then this ended up being for project X, and then we'll do save and new. Okay. Let's say now we're gonna do I'm gonna do payroll. Okay. Now payroll is a little bit tricky because most of the times people will be using either a payroll company or QuickBooks payroll. We're not gonna cover payroll costs today. That's just not part of what we're doing. But just to simplify the example, I'm gonna create an employee here, and I'm going to write him a straight check. Let's do employee here. And I write him a straight check to labor. So let's do labor here. And let's say that the straight check for him was 569.90. And that goes to project X. Again, there's payroll taxes and that sort of thing. For now, let's ignore it just because we're not going to be covering payroll allocation. Payroll allocation, it's its own exercise by itself. We're just covering standard job costing so we can look at reports. Okay. Then we'll do save and close. Okay. So we have our direct labor being posted there. We have our equipment rental. We have our subcontractor. Let's say we're going to buy some materials. So let's do an expense. And let's say we are going to pay with our credit card. Do we have a credit card here? Yes, we do. And we're going to go to Home Depot. Okay. I know a lot of contractors buy it, the major companies, but for now, let's say Home Depot. I misspelled it, but who cares? And we're going to use the item and we'll put materials. Okay. Let's call this 2x4s and drywall, whatever it is, right? And then let's say this was 7,890. And then we're going to send this to project X. Okay, so I think we have enough expenditures at this point to kind of get an idea more or less for what job costing looks like. You're looking at the P&L. If I collapse the P&L, you can see that it's only broken down between my direct project cost and my direct labor. It's simple, easy to read. Okay, now let's go back into that estimate. And let's invoice. Let's go back into the estimate and let's do an invoice. I'm going to create an invoice. I'm going to cover progress invoicing in a different episode. I believe it's episode 3. We're going to cover that just because there's some moving parts with the work in progress reports for the progress invoicing report. So we're going to do just a straight invoice for the project. Okay. And we're going to invoice this, let's say on the 12th. Okay. Now, one thing that's really important is if you wanted to break down your sort of reimbursements item by item the way you invoice it on the original one, you can leave all this stuff in here. If you don't want to break down your income accounts, you don't have to break them down. You can just have one construction income lump sum account and have that reported there. I mean, there's just different ways of reporting. I'm going to show you both ways. I'll show you the effect of either one so you can see it. So I'm going to leave it like this, the way it's broken down, just so you can kind of understand what's going on. Then I'm going to click on save. Okay. And we're going to go back into our profit and loss report. Okay. So we're looking at a profit and loss report. Again, it's the only job we've been working with today. So we have our income, which is 34,231. If I collapse that, okay, that's the only number you see, no matter what. Okay, if I expand it, then you can get to see it broken down. And the part that supposedly you're supposed to be profiting from this is 6846.25. So one of the interesting things about this technique that I'm showing you here is that if you were to do it like this, and it's very difficult for me to know because QuickBooks doesn't have a way of knowing how much I thought I was going to make versus how much I actually made on it. The only workaround I have for this is this one, is where you expand your income account, you look at your markup, which is 6846.25. You look at that number and you compare that with your gross profit. And then when you look at those two, you will know if in that particular job you were over budget or under budget based on what you had. So again, QuickBooks doesn't have a report like that where I can know whether I was under budget or over budget because QuickBooks doesn't keep control of the expenditures that we have. But this is one way, it's one simple way you can actually track this. So it's just a really interesting, in my opinion, kind of a workaround for this. Now, what you could do if you temporarily want to know whether a job is over or under in a really high level way. Like for example, let's say I were to do columns here and I were to pick customers and I click on run. So I'm going to get all my customers across the board. Let me collapse this for a second. So if I get all my customers across the board, here's my profitability. Let me do it for one more, just so we can kind of like see the value of what we're covering here. I'm going to do an invoice here, and I'm going to pick another project. Let's do project ABC. And to simplify our life here, we're going to do materials of 26,000, and then we're going to do overhead in this case. I'm simplifying here, and let's say overhead is 9,000. So let's say, for example, we have the owner of the construction company who's not on payroll, who's not even going to have a payroll expense. They're just going to put how much they spent versus, how much they made on it. So they're just simplifying the process here in this particular case, right? So, or in this case, how much they thought they were going to spend, for that matter. So then I'm going to click on save. And let's say I actually went in and I spent, so let me do an expense to Home Depot, which I misspelled. That's okay. And we're going to pick here materials. And let's say we actually ended up paying $27,630 in materials for project ABC. Okay, that's my actual expenditure. Save and close. So when I look at my profit and loss overall, and I split this up by customer, and I click on run, I can actually see the profitability of both of my jobs. However, it's super obvious to me, especially with this type of chart of accounts. It's not super obvious to me, whether I was over or under on these jobs based on the original estimate. So there's one ultimate workaround for that, which is do everything that I'm telling you to do, and then temporarily, I'm going to duplicate this here for a second, temporarily go into your chart of accounts. I'll show you that in a second. So temporarily, we're going to go into, let's go into our, actually, I might be able to pull it off here. Yeah, I think I can pull it off here. So I'm going to go into my customize, go to filters, and then I'm going to pick distribution account, and I'm going to pick select all. But then what I'm going to do is I'm going to remove markup. That's assuming that you do everything the exact same way I'm telling you. You're following every single step, right? You're not missing a beat here, okay? If you do that and you remove just that markup item, and every one of your other items ties in to the actual expenditure that you have, and because you're doing, again, because we're doing the bundle where we're hiding those details from our customers, but we are including them on the invoice, if you're doing that, you will actually know from this report how much over and under you were for each one from the original estimate. Yeah, I know, it's crazy. Super cool, super interesting. For the people that are going, what the heck did you just do? I'm going to show it to you in a different way, okay? In a different way. So let me go back and do all income and expense accounts again. So we're back into a regular P&L. And I'm going to do it the other way, which is grabbing the chart of accounts, picking that markup item that I have here. And what I'll do is I'm going to now remove it from income, and I'm going to send it over to like other income. So I'm sending it over to some other category so I don't even see it. Then I'm going to click on yes. Then I'm going to go back into my profit and loss, click on run, and it will have the same effect. So I will know, how much money I received for getting reimbursed for my labor, my materials, how much actual labor and materials I spent. So the top income is what I quoted the customer and what the customer paid me. The second one is what I actually ended up spending. And then down here in the bottom where you see markup management fee, that's my actual profit, but it's extracted from the P&L calculation so I can know what my over and under is. That's this number that you see on the gross profit, that's my over and under. Not necessarily gross profit, that's my over and under. My true gross profit will require me to go back and send this account back to income, right? Because that's really where it belongs to. Right? So send this back into income. Okay, and go back into the profit and loss and click on run report. So like I said, as much as I hate QuickBooks Online as a standalone solution for a construction company, there are ways to make lemonade out of it, workarounds. And if you follow my work, you know that that's kind of what I do. Like, when everybody's sleeping in my house, I'm there pressing every possible button to see how can I get QuickBooks to do something else? How can I fool QuickBooks into thinking it could be something else for me? Okay. Because I don't have a report, like an estimate versus actual report that would give me that actual number, which would be wonderful to have. QuickBooks Desktop's had it for 20 plus years. Okay. All right. So that's kind of the most advanced part that I wanted to show you in terms of like chart of accounts, bundles, understanding, the limitations that we have here, due to the circumstances. Let's cover zero net check for a second. And I'm going to do this to be able to spread expenses across multiple jobs. So one of the things that ends up happening quite a bit is, for example, I'll go and I'll make an expenditure, or I'll make a bunch of expenditures, but I don't know exactly what job is going to be for until the end of a period. And then at the end of the period, I'll do some sort of split for it. Okay. So I'll explain that in a second. So let's say, for example, I'm going to go into, let's do a check to Home Depot. And let's say that through the month, let me just use the materials account. Actually, yeah, let's use the expense category. Sorry, the expense category. I will never use the item until I know what customer it's going to. So I will use the category when I don't know what customer is going to. That's kind of how I can differentiate whether something has been assigned to a job or not. Always use the item when it goes to a job. Use the expense category when it's not going to a job. So we're going to put this under materials. So we got our materials expense account. And let's say we spent a total of $29,870. And then on the customer project, I'm going to create a customer called allocate. Okay, allocate, admin, overhead, no job, multiple jobs. You can call your customer whatever the heck you want. Okay, just give it a unique name. Okay, so I'm going to call it allocate, just allocate, and then click on save. So I'm going to go back and pull my, do save and close. I'm going to go back and pull my profit and loss report. Okay, and I'm going to break this down by customer. Click on run. And then notice that I have an allocate customer there with a balance. I should never have an allocate customer with a balance. Having that there, or having an overhead, an admin, generic, multiple, whatever you want to call it, having that there, having just sitting there, it's going to be an issue because you are not doing your job cost correctly. So let's say I wanted to split that across multiple jobs. The best way to do that, my opinion, is to do a zero net check. You can do it with a journal entry too, but I think a zero net check is better because a zero net check allows you to apply it to items. So we're going to go into new. We're going to go into check. I'm going to call it allocation check. Okay, so I'm creating a vendor called allocation check. I want to be pretty consistent. And then under category, I'm going to take stuff from materials. So I'm going to take from materials. And let's say, for example, I don't know yet if I can allocate the entire amount. Let's say I can only allocate 15. It's the only thing I have now. So I'm going to do a negative 15,000 and I'm going to take it away from allocate. And then I'm going to put each one into whichever project I want to put it on. So I'm going to do 2 line items here. So let's say we're going to do 8,000 to one project and 7,000 to the other project. And then we'll pick, let's say, project ABC. And then let's do a new project, kitchen expansion, and click on save and close. So essentially what a zero net check is, and I close that too quickly, I'm going to open it again so you can see it. So what a zero net check is a check. It can come out of your checking account. It can come out of a clearing account, whatever is easier for you. I think clearing account will be less confusing. You're going to take the money out of your current customer called allocate and the chart of accounts account. So I'm taking money out of the account and putting it into the item, which will send it back to the same account, essentially, but it's going to send it to each of my projects. And at the end, this check nets out to 0. That's the famous zero net check. It's really important, okay? So I'm going to click on save and close. Okay, and now I can break this down by, let's break it down by customer and click on run. Okay, so notice that there's still an amount in the under allocate because I haven't allocated the entire thing. Okay, yeah, and do that, right? And again, the reason why I'm doing this is because maybe these are not, I cannot tie one transaction or multiple transactions to a specific job. This happens very often when people buy inventory materials, where they buy materials, buy materials, buy materials. They don't know what job is for. It's glue, it's paint, it's small tools, whatever. They send it all to job cost, all to allocate. Then they look at everything they spent for that month or that week or that period, and then they go figure out, where that goes. Okay. So again, it's not as easy as just going back to the original transaction and fixing it, because there might not be a one-to-one relationship to that transaction. So this is when we have an accumulation of expenditures. Again, materials is the most common one. Okay. Especially when the materials are difficult to track. So I'm going to go back into projects here, just so we kind of want to see what's going on in every one of our projects. And you can look at here. Okay. We have our 3 projects. We have our income and cost per project. Our project screen will tell us our profit margin percentage on each one. If I click on any given one of these, it's going to go into a detail mode, which will tell me, okay, which income account was affected. Okay, this is why I find this really valuable, breaking down the income accounts, because in this project screen, I can't see items. So the accounts will be quasi items. It will be the closest thing to an item that I have. So this is why I particularly like breaking down the chart of accounts the specific way I'm showing you, and why I'm going to recommend you that you try this with one of your clients. You're going to download my template. You're going to get access to my template so you can do it. It will take me a day though, because I have to double check, make sure the mapping is correct, because it looks like one of my items wasn't mapped correctly. So I don't want to send you one it's got a mapping issue, but you will have access to that pretty soon. So you can do the same thing, and then when you go into projects, you can see it broken down. On episode 2, which we'll record in February, we're going to talk about the hourly time cost, the labor stuff, which is it's just got a lot more moving parts, just because everybody does payroll differently. Okay. All right. So I think we covered the zero net check. Oh, I think one more thing that might be worth it from covering on zero net check. I don't necessarily think it happens that common, but sometimes it happens. Sometimes someone's going to want, let me go back into my report. Sometimes you'll have like the owner of a business, and it's like a partnership or a sole prop, and there's no payroll, but the owner wants to reflect their own labor as part of the job cost, right? So that's going to be a very subjective thing. And the way we do that is we're going to do either a journal entry or a zero net check. Actually, they both work. Again, we're going to do a zero net check because we're going to kind of follow that tradition. So we're going to go into check. We'll write it from the clearing account. We're going to call this allocation check again. And then what we're going to do is we're going to bring this from a generic account. So that would be labor, like internal labor. So we're going to have direct labor right here, direct labor. And let's say that the owner of the company decided that they're worth $50 an hour and they worked 80 hours on the job, right? So they're going to go on the item, they're going to put labor, they're going to put 80 hours for $50 an hour, and they're going to assign it to project X. And then on their amount here, they're just going to put negative 4,000. And in the customer category side, on the customer project, you cannot put the same project there. So in this particular case, we're going to send this to allocate or leave it without a project. Either one works. Now, particularly, I don't like allocate because allocate is actual real expenditures. So we can just leave it blank and just kind of see what that looks like blank in a second. So I'm going to click on save and close. Okay. And then I'm going to break this down by project again. So we're going to do by customer. And you will notice that on project X, under labor, okay, I have 4,569, which is the 4,000 I just added, plus the 569 from later. And then notice that there's a column that is not specified for negative 4,000. Because this is not a cash expense, it's going to net out to zero. So my real expenditure is a 569, which is the actual real check I just wrote a couple minutes ago, right? So that's a way that you can at least show the expenditure as a cost to the project. So let's go back into projects here, so we can actually see it in like this like sort of pretty illustration. We can see that the $4,000 was added as direct job labor, and now that lowers my profitability for the project. It doesn't affect my net P&L. My net P&L, it's 4,000 here minus 4,000 here. It's just solely assigning it to the project. Okay. Now, if you were going to do something like this, in my opinion, I would probably create a separate category account for that, right? So I would go into my chart of accounts. Again, this is all personal preference, I would say. Let's go to, let's create one. Let's go to new, and then we'll create under the cost of goods sold category, under the subcategory of direct labor, we're going to create one called owner's labor, right? So sort of depicting or illustrating that this is not actual payroll costs, that this is like owner's sweat and tears, right? So we do something like that, and then also do the same thing with the items. So I'll go back into my products and services, and I'll duplicate this one called labor. Let me duplicate that, and then we'll do owner's labor. Again, this is only for the construction companies in which the owner doesn't pay themselves, but wants to have some sort of accounting for what their time is worth. And then we'll point this one to our owner's labor account. And then on the income account, we probably should just put that under markup in this case, because it's basically this is the profit of the business anyway. The owner's labor is the profit of the business. And then we click save and close. Again, because the owner doesn't have payroll in this particular case. Okay, so I'm going to go back into that zero net check. Let's do it here. Where's my allocation check? And use owner's labor, and the same thing here. I want to always match this up. Okay, and then maybe for the customer, we'll put owner's allocation check. Okay, so maybe we're gonna separate the allocation check that is related to the owner versus the one that is not. So that was 80 times 50. Yeah, correct. And then I click on save and close. So then when I go back into my projects here, I'm gonna refresh and then see what the expenditures are for this project. Okay, and I think it was project X. Okay, so then I can see it here. So it's up to you whether you want to do this or use the timesheet method. We're going to cover the timesheet method on the second episode, the one coming in February. The reason why you might want to do this and not do the timesheet method sometimes is because the timesheet method is not going to work if you have payroll turned on. So once you have payroll turned on, if you have a company that actually pays employees payroll but doesn't pay the owner, and then the owner wants to have some sort of understanding for what their cost is, they're going to have to do something like this. Again, this is all the lemonade that we make out of the weird, quirky limitations and restrictions that QuickBooks Online has. Okay. Let's see what else we got. We got journal entries. So I'll just do this real quick. It's really not that complex. So in the same token, as we're doing a zero net check to allocate expenses to a job, let's go back to the P&L one more time, just so we can use the report as context. And then we'll do profit and loss. And we'll do by customer. Okay. And let's say we want to allocate these materials via a journal entry, because I don't want to use an item, because I don't need to use an item for whatever reason it is. Okay. So I'm going to take the 14,800. Let me just copy that. And let's do a journal entry. Journal entry. And let's do materials. We're going to credit the 14,800 from allocate, and then we're going to send it to a specific job. So this is the same exact thing that you would get with the zero net check method. Same result to the P&L, same result to the projects area, same result for everything. The difference is you don't get to use items. And as I mentioned earlier, the reason why I might want to use items is because I'm dreaming every day. I go to sleep every day and I pray to the QuickBooks gods that they give me some sort of item level job costing report. And I will be ready with all my clients for the last 3 years that I've been hoping and dreaming about this. I'll be ready to produce it because I've proactively created items, something that I learned how to do when I used QuickBooks Desktop. Okay. And it has to do with just being trained in QuickBooks Desktop originally. Okay. So we're going to go ahead and hit save and close. And then this will now, once we look at the P&L again, I'm going to refresh it, which you see nothing else under allocate. Look, it's a 0 now under allocate. And then all my materials have now been sent to the proper jobs. So you can use a journal entry, zero net check. As a matter of fact, a zero net check is the same thing as a journal entry. It just uses items instead. Okay. The other cool thing about the zero net check versus the journal entry is with the zero net check, I can choose the vendor that I'm interacting with and the customer job. Whereas if you use a journal entry, you only got one place to, you essentially only have one place to enter the name. So you can only enter the customer job and you will have no detailed information about the vendor that you're interacting with or the vendor that you want to see on a report, like an expenses by vendor type of report. Okay. So again, just journal entry works, but you only get one field for name, whereas zero net check, you get both, potentially the payee and the customer job at the same time. Okay. Let's talk about, we're pretty much almost done here. So let's talk about vendors versus 1099 contractors. And if you are watching this in January, maybe February of the beginning of the year, you're going to have the need to prepare some 1099s. So there's a couple of first steps that you want to do. First of all, you want to identify your vendor first. They need to be created as a vendor, not as an employee. So that's a major mistake that people make. They'll create the vendor as an employee, and then they're screwed. They're gonna have to change every one of those checks to employee to a vendor to be able to do this. Then you're gonna go to both your contractors here. You're gonna click on it. You're gonna click on edit. So you're gonna edit the contractor, and you have to mark track payments for 1099. This is crucial. Without this, you're screwed. You cannot report your 1099s. So let's add their tax ID or their social security and then click on save. Okay. So that was the first one. Now let's do the next one, which is Steven. And let's click on edit. And I'm going to mark that one and let's put Steven's tax ID or social security, whatever it happens to be. And then click on the check mark and then click on save. So both of my vendors, they are vendors, by the way. They're going to be in my vendor list. They're tracked as a contractor, which means that when I go into payroll and click on contractors, it's like a sort of a different place. When I go on contractors, you're going to see a list of my vendors that were previously tracked as contractors. So that's what the contractors tab is inside the payroll menu. These are vendors that have a little checkbox that say they're 1099 contractors. Okay. So now we're going to click on prepare 1099s. And QuickBooks is going to walk me through it step by step. So I'm going to click on let's get started. Okay. And then, so my address. So 123 Main Street. So where my office is. And I click on save. Okay, and then this is my tax ID, right? My tax ID as the vendor, as the provider, as the person contracting people. Then it's asking you, which of these boxes would you like to report to? So we're going to do non-employee compensation because there's a new form, a brand new form. And if you've done 1099s last year, or because I don't know if somebody's going to be watching this in 2022, 2023, but if you did 1099s for 2019 or during 2020, early 2020, your mapping got all messed up because they changed the forms in 2021. Starting 2021, there's no more 1099 miscellaneous for subcontractors. Now there's a 1099 NEC. NEC stands for non-employment compensation. Why the IRS decided to do that, I don't know. They're crazy to change it. It was working perfectly. I don't know what issues we had with 1099s in the past. Maybe it's because a lot of people were reporting 1099 labor into box 3, which is not subject to self-employment tax, and people were not paying the self-employment tax. Maybe that's what it is. I actually don't know which one it is. So we're going to pick the category that this will be tied to, which would be the subcontractor cost. So as long as all my payments to all my vendors are tying out to the subcontractor cost account or any of the accounts in the event that I choose multiple, they're the ones that would be. So 5102. Okay, there you go. So then I'm going to click on next. Then it says, hey, you got missing addresses and that sort of thing. So in here, you're just going to like make sure that you enter all their information correctly. Okay. And if it's an individual, it needs the 2 hyphens, right? 3 digits, 2 digits, 4 digits. If it's a business, then it needs the 2 digits, the hyphen, and then the rest of the 7 digits. So this will walk you through it. This workflow would actually force you to complete the setup here correctly. Okay. So I got both set up, no reds. Remember that the subcontractors, they need to have an email loaded in there if you want QuickBooks to actually email them directly the 1099. So I'm going to click on, you see right here it says add from vendor list, this little button. They added this, it's pretty cool. If you have any vendors that were not having that checkbox that says they're 1099, you can like make them, you can mark the checkbox automatically from here. So it's pretty cool. So you basically kind of force it into becoming a 1099 contractor in there. Okay, then I'm going to click on next. Okay, then it says contractors that meet the threshold, below the threshold, and not marked. No numbers are showing because I don't have anything for 2020 because 1099s are done per year. So I'm going to close this for a second and just do a couple here. So I'm going to write a couple checks. So I'm going to do a check from business checking account, and I'm going to put in the subcontracted category. We'll do 50,000 and we'll choose Sally, and let's do this last year. Save and new. All right, let's pick the other contractor, Stephen Mayer. Subcontracted costs. Now I'm going to show you something. For Stephen Mayer, I'm going to pay him $500 in subcontracted costs, and I'm going to pay him $1,000 for materials. Okay, and the reason why I'm showing you this is because since materials is not mapped, he will show as not in the threshold because it's under 600. Okay, so then we click on save and close. Okay, then I'm going to go back into my contractors, prepare 1099s, continue. Okay, so now we have, it's only reporting for Hector because I paid him 50,000. But if I switch over and do below threshold, notice that this one is showing that's below $600 because I paid them some money to a different category. So materials is excluded here because it was a reimbursement. Okay, so it depends on what your contract with your contractor looks like. If you have a lump sum contract, then everything's included, materials and labor. But if you have a time and billing contract, where they're going to give you a receipt and you get to see exactly what they're paying you. And they're foregoing the receipt. They're letting the receipt go. And in exchange, you're giving you the receipt and you're reimbursing them one-to-one in that receipt. Then the materials will not be included in the 1099. Now, this is some tax law stuff and it gets a little hairy. But if you're not an accountant or an expert in this area, obviously consult with a tax person. But the way I do it is if the contractor forgoes their receipt and in exchange gets a reimbursed amount for the materials, we exclude the materials because they bought it in our behalf. And then we only include the labor portion. Okay. Also, if we pay the customer with a credit card, so for example, I'm going to just close this out for a second. And I'm going to do a new expense. And I'm going to pick here Sally. Okay, Sally, the subcontractor. And I'm going to pay her with a business credit card. I'm going to pay her $25,000. We're going to put it on the right category, subcontracted costs, and then click on Save. Close that. Go back to my 1099s. It gets pretty tricky, believe it or not. It's not really that straightforward. She's not showing here. But if I do contractors not marked, actually, okay, sorry. It's just the contractor is showing as Hector Garcia. Hold on a second. This might be confusing me here, the way it was set up. Let me go back and check the contractors here. I think I must have done something that confused me. Yes, that's what I did. I have one name here on the top. So let's put Sally here. Okay, because that was just driving me nuts. I was, I was misreading the whole thing. Okay, so let's go to payroll, contractors, prepare 1099s, continue. Okay, that's better. Okay, so notice that Sally has $75,000 worth of payments, $50,000 is being reported, and $25,000 is being excluded. If I click on the $25,000, it will send me to a report of what's being excluded, and it's not very QuickBooks doesn't tell you why it's excluded. You need to know this. The reason why it's excluded is because I paid with a credit card. So anything that you pay with a credit card is excluded because the contractor is going to receive a 1099-K. Now, if you pay people electronically through like Zelle or Cash App or Venmo or an EFT type of transfer, not with a credit card, just like a bank-to-bank transfer, a wire transfer, that is included on the 1099. Is the credit card payments that are not, or paying them through PayPal is not, because PayPal will include that in a 1099-K. Okay, so I know we're getting really technical. I don't want to make this something about tax, but you know that's how 1099s work in the U.S. pretty much. Okay, so once you're done, you're done making sure that everybody is here, it's here, that is supposed to be here. You click on Finish Preparing. You're gonna go to eFile, which is $15 for the first 3 1099s, then $4 each additional 1099, and then it caps at 20 1099s in total. So it's about 80 something dollars, the maximum that you will ever pay using QuickBooks service. So you click here and click Continue. It will ask you for your credit card number. You enter your credit card number. Once you enter your credit card number, you'll be able to double check the information, and then you can file it by clicking on there'll be a button that says Submit eFile, but it won't let you eFile until you pay, right, which is really well put together. So you can't download it or view it, so you can print it or email it or e-file it until you pay. But that's the Intuit 1099 e-file service. It's awesome. It's amazing. Honestly, I love using it. It's just very, 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 very smooth. One of the questions I'm getting a lot from fellow accountants is the new 1099 NECs changed this year, but the states have different rules when it comes to filing 1099s. Intuit e-filing service, as of now, as far as I know, does not have the capability to e-file to the states. So I don't know what the process to e-file to the states is. I would probably look at, and I'm not endorsing them, but I can tell you I've used them before. It's tax1099.com, I think, is the one that we used to use. Let me just open it up real quick. I'll look at it. Yeah, this one. So you go to tax1099.com, and I'm crossing my fingers that these people will allow you to do state. I don't know. I live in a state that doesn't require it. So, there it is, state filing compliance. Okay. So if for whatever reason you're in a state that requires that, you can use tax1099.com. And there was another one. I think it was track1099.com. Keep confusing them because they're kind of similar. Yeah, these are the two. Tax1099.com, track1099.com. I haven't used Track. I assume it's great. With Tax, I know that this integrates with QuickBooks Online. So you could copy the data from QuickBooks Online just the same. It takes a couple of extra steps, that's for sure. But if you don't have a state requirement, then you can do that. Okay. All right, cool. So I think that's it. I think that's all we got. Thank you. So I'm going to see if there's any questions. Let me answer any pending questions that we have. For the next month, we're going to be covering importing timesheets using Transaction Pro Importer, just because I like importing timesheets and it's going to be valuable to understand that. We're going to be covering all sorts of labor payroll-based costing. We're going to do it with a timesheet using the timesheet method. We're going to do it with actual labor using QuickBooks payroll method. And then we're going to be doing it using a third-party payroll processor like an ADP or Paychex via a journal entry. And then we'll discuss billable time and materials on that episode 2. Again, if you want to be part of episode 2, you must pay to be part of the series. If you sign up before January 22nd, it's $300 for the entire series. If you sign up before February 12th, is $400 for the entire series. You can watch them live as I record them. You can watch the recording after I'm done recording them. And the recording will be available for a whole year for you to watch afterwards. And I do expire them after a year just because they become obsolete over time. Unfortunately, this is what dealing with QuickBooks Online is all about. Like you do this incredible effort to create training materials for QuickBooks Online. Next year's obsolete because they changed one little box or something like that, and it just looks very different. And it's hard for people to follow if it's not the exact same screen. This is why a lot of these this is why I sell these trainings and I train them live. I don't do like a recording and edit them, because honestly, if I were to do that by the time I'm done, then the training becomes obsolete as well. So that's why this is my style, right? We give the first one of the series away as a preview to kind of like, is this worth it? You know, are you going to be able to get the value out of it just by watching part 1, assuming you're going to get 6 times that by getting into the whole series. So I give that one away for free, and the rest you can join, and you can, we'll spend half the year together talking about how to make more lemonade out of QuickBooks Online for contractors. Okay. Again, I don't think there's any more questions. I copy and pasted the link in the description, and I'll put the coupon code again. Since you're watching live, I'm only going to give you the coupon code that expires tomorrow, because I don't want to give you the other coupon code. That way you get the better deal of the two. Okay, cool. All right, so I think that's it. I don't see any more questions. I did get a few people ask me, since you've been poo-pooing QuickBooks Online the entire time, which version of QuickBooks would you recommend for contractors? So my answer is, honestly, QuickBooks Pro, QuickBooks Premier, or QuickBooks Enterprise. They will all work really, really well. I think QuickBooks Premier is a little bit better than Pro just because it's got more built-in reports, and QuickBooks Enterprise is better than the other two because it has the ability to do the WIP report, the work in progress report for percentage of completion method. Larger companies, in construction companies, need that for their bonding and all that stuff. So that's why QuickBooks Enterprise. So QuickBooks Enterprise for the larger company that's going to need a work in progress report. QuickBooks Pro or QuickBooks Premier, preferably Premier, of course, for anyone. There's a smaller one that's not dependent on a WIP report for bonding. Ellen's asking, can QuickBooks Online correct 1099s? No. QuickBooks Online can only file them. To correct them, then you would use the Track 1099 or the Tax 1099 one that we talked about. So perfect. We lasted exactly 100 minutes, which is my goal is to try to keep these um, under that. Um, and um, and again, we use QuickBooks Plus this entire presentation. If you were using QuickBooks Advanced, it would be the exact same thing. I didn't show anything that would work better or worse in QuickBooks Advanced. We're going to cover QuickBooks Advanced topics towards June or May of this year, like the fourth or the fifth episode, because I'm kind of waiting for one major release to come out, a custom reporting tool that they're going to build, so we can see if maybe we can work in that custom reporting tool into Contractors. So I'm waiting a little bit more to talk about the advanced episode for that. All right, so I will email you guys a copy of the recording for this episode. I will post it in YouTube. It's part of the intent to promote the paid series, and I'll email you also the coupon code as well. So just in case you forgot to sign up, we already got like maybe like 15 or 16 people signed up, which is cool. We're awesome. So again, thank you very much. And if for the people that are doing webinar only series, I will see you after tax season on April 20 something, the 3rd or the 4th Thursday of April. Thank you, and I'll see you in the next one.